All right, traders, good afternoon. This is Christian from Hartford's Tribeca Trade Group, and it is Monday, June 22nd. So I would say very easy theme of the day. Basically, just good start to the week, and a little bit of volatility on Friday at the end of the day just continues to kind of bring out buyers, right? Even not even even we didn't even see a major dip or anything like that at the end of the week with quadruple witching, but we're continuing to see nice setups, and I think it's just a product of this environment. One of the things that we talked about in the weekend video was that there continues to be just a lot of doubters in the market. Uh, there's a lot of people that are really bullish too, but we talked about S&P positioning by the speculators. They have a huge short position. They added to their short last week. So, these are just some of the pieces of the puzzle that we put together, but kind of helps you position a little bit when you know that there's such a massive short position and S&P futures. The positioning just doesn't seem like everyone is basically all in at this point. And one of the reasons why we're continuing to kind of drift up and to the right, and where dips continue to be bought. So for now, I think we just kind of stay with it, realize what the proper places are to take risk versus not take risk. You can see for the S&P chart, really a nice green candle for the day, bullish engulfing. We had this kind of back and fill, a little bit with these inside candles, and maybe Friday went a little bit too low. But looking on the 5 minute chart, which is, again, the 5 minute, the 1 hour, they really kind of help you, I think, in terms of find some levels. But we talked about this 5 minute VPOC that wasn't taken out on Friday, was kind of left for the overnight session, and we gapped a little bit lower, and you can kind of see the trajectory of what we had here, and we basically made it all the way through today's value areas. So that's complete for the day. We talked about this in the member Q&A that we gave at 1 o'clock. I said, watch if we kind of drift all the way up here. Just be mindful of how you're taking positions, right? Everything is a, basically risk to reward framework, right? We always want to know whether or not, when we're putting on positions, is it a good entry point, or is it, one that is not set up great, risk to reward. So we went over that midday and just said, hey, be careful just chasing things at the end of the day. We've had a nice day, but we closed right on the highs. So maybe we get a little bit of follow through in tonight's in the overnight session. Again, even though the market opened lower, futures opened lower last night, holding some positions in this market to me makes sense. Because again, if you look at that, over time relationship that, money is made in the overnight market pretty easily, then for me it means you got to keep some positions on, right? Again, that's for me, and again, I'm not telling you what to do, not giving out any advice or recommendations, anything like that. So a couple of things that worked really well from what we saw on Friday with biotech. So here's a good example of staying long something, and the XBI ETF was up 3% for the day, one of the best performers on the day, and now breaking out. So this pattern is showing up more and more, or just regularly, where you have to be, of course, a little bit patient. Biotech, after leading the market higher back in April and May, took a pause for about a month. Got a little bit overbought, overcrowded. We started to see some healthcare outflows, right? XLV, the healthcare ETF, which does have some biotech in it, saw the biggest 1 week outflow in its history about a week and a half ago. So that kind of just tells you that that it was kind of overcrowded. So it was one of those things where it had this huge outflow, but it had seen like 7 to 8 straight weeks of inflows. So it got too crowded, and people also lose their patience at the wrong time. So we caught this move towards the end of last week, and the calls that we put on yesterday, I took a couple targets in this. I think I got one more after this, didn't I? I think I got seven. I thought I got 720 on this too, but But still, 1 day gain. I mean, that's really nice. Again, some people don't like to trade ETFs. They like to only trade single stocks. There's a reason why I trade ETFs for some of these things. They're a lot cheaper than the single stocks, and they move. Something like this, equally weighted biotech. It's got plenty of juice in it, so it fits. And then you're also the advantages always with biotech stocks. If you're not an expert in biotech stocks, like you're not following every name, in terms of when there's a drug release or what the ramifications can be, which I don't. I'm not that granular in biotech names. Then you just own the whole ETF, the whole space, right? And again, on a move like this, it works well. So that was interesting. Where did gold finish for the day? Again, always the closing print most important. Gold finished up 0.75%. I've said for a while that I didn't want anything to do with gold as it was doing this big sideways action, but things are starting to look interesting. We talked about this also in the weekend video. GDX had a nice day today, up around 4%. I think GDXJ, junior gold miners, were also up a little bit more. So this chart looks a little bit better to me, up 4.9%. And you just have to remember, you look and you're like, oh, wow, up 4.9%. I don't want to chase that, is what a lot of people say. But this is the first day it really gave the trigger, closing back above value. And, a lot of nice things going on here across over the moving average. So you could have something on a little bit different, which I think gold miners is a little bit something different, different than what everybody else is doing, which is tech. So it's nice to be a little bit of a contrarian or have something a little bit different on. So, I think that's interesting. The one that I have played a few times is this gold, which this still technically hasn't triggered. It's not above the 50-day moving average. It's also not into value yet, but still. SSRM was one name that we saw just a little bit of call activity on Friday. This was one of the names that we put in the weekend watch list. Had a nice day today, up 5.6%. So again, something a little bit different to talk about. Of course, so I didn't participate in any of these today. I thought about it pre-market, but did not jump on that. And then you had a bunch of other things perform pretty well. Again, it's amazing, the software group. I did not put too many names on the watch list this weekend for software, but we traded FTNT today, made a really nice move today, up 4.5%. I took 2 targets. I left the last piece on, see if this thing, which, another name that's been pretty dormant for the last month or so, after, a really nice move out of this, consolidation for a while. And, I think at the very least 145.47 could be where this thing gets to. I took my first target at that VPOC takeout. Again, we set that up right on the open, so worked really well. Another stock that I'll keep today's video pretty brief, but the Chinese internet names took a little bit of a breather today. They've been super, super hot. That's the KWeb ETF. But I like the look of this NTES. We talked about this a little bit on Friday. I added to a position at the end of the day. Kicked around some Facebook today. Square, unbelievable. This is the gift that keeps on giving in this name. So some of these names, right, considering this environment where breakouts are working, consolidation and uptrends are working. The Fed, for now, even though they decreased the size of the balance sheet ever so slightly last week, they have the markets back for now. So in my opinion, letting some of these winners run, is important. That's how you get big winners, right? You have to keep on some positions, right? The name of the game is always to have small losers and big winners. But if you don't let the winners run, you can't have big winners, right? It's not easy to let positions stay on the books while they're continuing to go up higher and higher. It's one of the questions that I get a lot. Where do I take this trade off? Well, see if you can let it run. That's one of the hardest things to do in trading, is just let the damn thing run. I even put this trade on, like I didn't catch this square on this day. I put it on here, I believe. And this thing has been working. I mean, I put this thing on around $94, right? So some people don't even like that. They're like, oh, I can't chase that. And they're like, oh, well, maybe if it sells off, I'll buy it, right? Because they're like more of like the American Airlines investor. Oh, I need it to go down to buy it. Nope. You want to see a breakout. You want to see some confirmation because I bought this at 94 bucks and it's up to 105 in a week. Right? That's what I like to see. So again, it would have been nice to catch this on day one, and I think I did. I was playing with this name back in here, and I got stopped out when it went. So I was being super disciplined, and I stopped myself out when it broke below this. But just a lot of call buying today. A lot of broker price target raises. Seems like they're outdoing one another, raising their price targets to street high. We saw this in like 5 different names this morning. All kinds of bullish notes in some names. PayPal is another name that's running, which saw some calls today. Nvidia hit a 52-week high today, or is an all-time high, I guess. But stick with these stocks for now. My opinion is if you can, I take two approaches, right? I've got one portfolio where I'm just sitting with stocks and letting them do their thing. And I don't look at the account every single second, so I'm not tempted to take some of the names off. Just letting them run, letting them do their thing. Right? We know that that's another old saying, right? The more money is made sitting than trying to trade in and out of things. So, I do that. I have my one trading account where I look for things that are breaking out, like the XBI. But then I've got my tactical portfolio that is, I try to only touch when I get a sell signal. Again, it's one of the hardest concepts I think in trading is to just let these things do their thing. I mean, look at this name, this SE. This has not even given anybody a chance since this thing broke out around 65. So here's a good example too, right? If you would have bought this thing out of consolidation, right? So many like younger, more inexperienced traders would be like, "Oh, I'm not going to chase this thing up." Right? 61 bucks and it pops up to 66, broke out. Well, look at it now. That was 66, right? And you're like, "No, I'm not going to buy. I'm not going to chase this thing on a breakout. Where do I need to take a target?" Well, look at it. It's 113 bucks. And look at how strong. Like this thing has never even really gotten below the 5 period moving average. And I don't, full disclosure, I don't own this one right now. I was waiting for some type of, it seems like obviously any dip in this name gets bought, but I mean, this is probably one of your best performing ones and a good example of following a trend until it's not a trend anymore. Again, I'm throwing out a whole bunch of sayings in this video, but no one knows how long a trend is going to last. No one has a crystal ball and is going to be able to say when this thing is going to stop running. Right? It just is what it is. What you try to do is just stick with it as long as you can. And that's where the outside gains. So again, I'm embarrassed. I'm not in this one. Also, Lulu was a nice little scalp today, too. Again, I like coming back to this name. This name is setting up for tomorrow, too. So talk about a name. So, yes, a couple of names I'm mentioning have blown out to the upside. Tough to really say where you would buy that thing now. But something like this, even though it's in value for the week, so no like signal on the week, I played it for a scalp today on the weakness, right? It was basically right on the bottom of value when I looked at this thing. And I said, hey, this is a good place. I got a defined stop. And I got out of this thing at the top of value, and it just actually kept going. But if you look at the daily chart, if you forget about the 1 hour, like that's a nice bull flag that's forming here. So it may not go tomorrow, but I think this thing, my guess is that this thing resolves itself higher because that's what kind of market we're in right now. Unless the structure changes a little bit. But I think Lulu looks really good. All right, so that's one to look at for tomorrow. I think I talked about NTS already. It's been a long day. I'm tired. I do a lot of work on the weekend, so Mondays I get kind of tired. I do a lot of work for members on the weekend. I put together 2 videos. I put together a watch list. And I think I took a couple names on the watch list today, and they worked pretty well. So what else? Any other trades that we did today? I got stopped out in one trade today. One trade I put on didn't work on Friday. From Friday, that's fine. Oh, let me talk about this trade really quick. So I want to like make sure that I talk about this in a video so I can go back so we can figure out what the hell happened in this or what is going to happen in this name. NKLA. So this Nikola stock, right? That we see all this kind of crazy option activity. The skew is crazy on this thing. The puts are much more expensive than the calls. So there's usually, in my experience, one of two reasons for that. Why the puts are so much more expensive than the calls is because there's no borrow in the stock, meaning you can't short the stock. There's no share, there's no locate. So that could be what's going on with the name, and therefore they make the puts really expensive and the calls cheap, right? Because you can't borrow the stock. So that goes into the option pricing. That borrow, believe it or not, if you're not familiar with this concept, goes very much into the pricing of options. Number two, they could have some type of corporate actions event that's coming where they're going to dilute the shares. I don't know. But when you sell, so there's two types of spreads. Well, actually, there's several types of spreads. But when you're doing a vertical spread, and I'm using this term because somebody asked me about it today. You're either doing a debit spread or you're doing a credit spread. A debit spread, you are, if you're doing like a call spread, you're buying the nearer term strike and you're selling the further one out, right? That's a debit spread. A credit spread is the other way around. You're selling the nearer term one and you're buying the further one out. And what happens in those trades, whether it be on the put or the call side, is you're collecting premium. And then what will happen is by expiration, if you don't want the stock to get through your strikes, in that sense, what you take home is the premium that you sold. So for this trade, and I'm just putting this out in the video because I'm curious if anybody knows what's going on in this stock. Normally, when you do one of these, like let's say a $5 wide credit spread, right? In this sense, it's a put spread. So I'm selling the 55 strike and buying the 50 out in August. Now, normally, like regular option pricing for a $5 wide spread, you collect about $1.80 by selling the 55 and buying the 50. That's like normal option pricing, and that means that the most that you could lose is the distance of the strikes. So if NKLA falls below 50 on expiration, so it goes through both strikes, the 50 and the 55, I collected $1.80 and I lost $5, right? Because I sold the 55, bought the 50. $5 is the most I can lose minus the premium collected, which is $1, which would under normal circumstances be $1.80. The most I could lose in that trade is $3.20. That's how a normal, when you sell premium like that by doing a spread, that's the normal option pricing. I'm just using dollar. Sometimes it's $1.60, sometimes it's $1.90, but it's in that ballpark. This spread, you're collecting, you're selling. So you have to go out to August to get this. But if you sell the 55 and buy the 50, you could actually collect $4. Which is way different than how a normal spread is pricing. So you're collecting $4, and the most that you could lose is if NKLA falls below 50 by expiration. All right, so the most that you could lose is the $4, and in this sense, I got $4.20 for the price, and the most I could lose is the width of the spread. If NKLA closes below 50 on August expiration, minus the premium that I collect. So I collected $4.20, and my risk is 80 cents. That's it. So, like if you're bullish this name, like that's like free money. If you think it's going to close, sorry, I shouldn't say free money because that's not right to say. But if you're bullish NKLA, I can't think of a better way to play this name. Because all it has to do is close above $55, Now I know I've got a lot of time, right? I've got a month and a half, right? We're not even in July yet. So, I've got almost 2 months actually to this expiration. But if this name stays above 55, that's all it has to do. I collect $4.20, and the most I could lose is 80. So there has to be some crazy reason why that trade is pricing the way it is. Again, it should only be like $1.80 is the most I could earn, but I'm getting over $4 for it. So again, it has to stay above $55. That's the whole key by August expiration. You could also do this if you don't want to hold this thing for that long. You could also I looked at the pricing for July. You could sell a 60, the stock's trading at $70, a 60-55 put spread, and you could collect about $3 for that, which is still obscene. So anyway, I've just figured I'd mention this trade to you. And if anybody knows why the option pricing is so off in this thing, again, my hunch is it's one of those two things. It's either the that you just can't short this name, and people are using options to be able to access a short, or there's some type of corporate action. Maybe there's some dilutive event that's happening that would bring the stock down. I don't know. I'll leave it there for the night. Again, everything that we're talking about is for information purposes only. Have a great night, everybody, and I'll see you on bright and early tomorrow morning.